Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. With just under 2 hours to go until U.S. stocks close on Monday, March 16th, the Nasdaq 100 is trading sharply lower along with the broader market. Trading was halted for 15 minutes shortly after the open as a then 8.14% drop on the S&P 500 triggered a circuit breaker for the third time in the last week. Before the open, futures contracts tied to the major averages hit their limit down levels, meaning they could not trade below that threshold. Those limits, along with the regular session circuit breakers, are imposed by the exchanges to maintain orderly market behavior. Coronavirus outbreak concerns continue to drive the selling pressure. The bulk of the focus has been on the need to limit social contact, a dynamic that is upending nearly all aspects of public life and is expected to continue for weeks or months. The weekend saw more travel restrictions, business closures, and school closures, and a warning from the government's leading expert that Americans need to, quote, hunker down. There also continue to be more concerns about inadequate screening and testing, along with more warnings about the looming stress to the healthcare system. Companies took action this weekend with airlines cutting capacity in flights, while Apple and Nike shut down retail operations. The moves prompted the Federal Reserve to cut the federal funds rate target by 100 basis points to 0% to 0.25% as the, quote, effects of the coronavirus will weigh on economic activity in the near term and pose risks to the economic outlook, the central bank said. In addition, the Fed promised over the next few months to lift its holdings of Treasury paper by $500 billion and holdings of mortgage-backed securities by $200 billion. Also, all principal payments from existing holdings will be reinvested. And finally, the Fed announced at 12 o'clock Eastern it would do $500 billion in an unscheduled overnight repo. Certainly a lot of news to process there. I'm Jill Malandrino, global markets reporter at Nasdaq.